tell you what, let's also move on and get to the word coming in. As far as commodities are concerned, it's actually gold that is losing some shine as we speak, and also silver that's on the back foot, down about 1.5%. Biren Vakil, commodity consultant at Paradigm Commodity Advisors, joins us on the show right now. Mr. Vakil, thank you so much for taking time out and joining us this afternoon. You know, it is a very interesting day. In terms of that pullback that we're seeing, does raise some fears when it comes to the kind of moves that we've seen off late coming in for silver. Do you think that little bit of bear market is back in play? Do you think that the volatility is right back in the spotlight when it comes to silver?
I'm not still expecting bear market, but it looks like a broader unwinding of risk-on trades under the leadership of Bitcoin. As Bitcoin has lost nearly 30%, 30 to 40% from its last October peak, I think all risk assets like gold or emerging equities, especially Asian emerging equities, are in corrective mode. What I sense is re-rating of risk-on assets, and some of the froth build-up in this asset is, I think, it is now reducing.
All right, then, so that's the take coming in as far as silver is also concerned. Any levels that are standing out to you? And we'll come to gold in a bit because, you know, you're seeing a little bit of a pullback there as well. But when you talk about silver, which are the levels that you think are going to be key support levels, resistance levels, key levels to watch out for?
Chinese silver market is still a bit, and forward curve here is inverted. In COMEX term, or London spot term, near-term support would be around 78 and thereafter 74. On upside, near-term resistance is 90 and thereafter 95. Currently, I'm sensing market may consolidate between 75 and 92. Once 92 is breached, and market hold above that level, we may see resumption of original uptrend.
Absolutely, and let's see how that really pans out for silver as well. But I quickly wanted to try and understand if this is a knee-jerk reaction that you're seeing coming in as far as gold is concerned, or do you think the near-term picture is also looking a little bit tepid? You did have the strong jobs data that seems to have sent a little bit of, a fear in terms of gold investors. With those lower interest rates also back in focus, that urgency has sort of weaned off when it comes to Fed cutting interest rates. Do you think it's a knee-jerk reaction though?
We may see some reaction, but what I'm sensing is the broad story, broad trigger, that is currency debasement trade or de-risking from fiat assets, is still very much intact. Moreover, gold ownership is largely institutional one, like central banks, large hedge funds, or institutional deep money, what I would say. So I don't see major or long-term bear market in gold. There are still bargain hunters are active, and dips are preferred to be bought rather than spike to be sold.
No, absolutely. And, you know, I wanted to get a sense of a couple of triggers that were actually tailwinds when it comes to gold prices. Right now, they seem to have not been that much of a trigger coming in, but there's de-dollarization and there's debasement. Do you think those two factors, how is the market currently perceiving them when it comes to bullion?
Current ownership, especially volume in gold, and open interest built up in Shanghai Gold Exchange is probably largest in terms of recent years. So I'm sensing volume participation, especially retail ETF investors as well across the globe, means Europe, America, China, and even in India. This participation is maybe hedge against inflation or hedge against chaos, or maybe market is sensing coming one or two rate cut in Fed, and mostly the end of QE policy is signaled by respected Fed chair. So I'm sensing first quarter or maybe March, April, we may see resumption of uptrend based on liquidity easing.
Rather than near term, do you see that $5,000 an ounce level also being maintained? It's very hard right now, Mr. Vakil, to be able to predict accurately what's going to be happening when it comes to gold prices. But if you were to give a little bit of forecast here, either in terms of levels or in terms of price direction for the next 3 to 6 months, what do you have in mind when it comes to gold?
Tailwind risk is clearly skewed to the upside, and path of least resistance is also upside. My levels, broadly speaking, for 2-3 months is 4800, and upside 5450, 5500 still very much intact.
Aradhan, and a very quick word coming in as far as Bitcoin is also concerned. Of course, we'll get back to, the metal space as well. But, Bitcoin has been in the spotlight for quite some time. You're seeing heightened volatility there as well. But what are you expecting? Last time, when you were on the channel, you had told us not to be catching a falling knife when it comes to some of the precious metals. Is that the sense that you have for Bitcoin as well?
For Bitcoin, I am reluctant to be on long side. I'm still seeing creative destruction, what I would lightly term. Still, I'm sensing downside there.
All right, then. So sensing some downside when it comes to Bitcoin then. But, what's your take coming in terms of gold and silver ratio? Where are you seeing it headed? Because it has been in the spotlight. You've seen those big moves coming in terms of the gold-silver ratio as well, keeping in line with the sentiment when it comes to precious metals. But what kind of ratio are you then expecting, and what do you think it's going to be indicating, at least in the near term?
Silver is high beta item, and currently ratio, technically speaking, ratio may move in favor of silver. In numbers term, it may retest 48, 50, or even 45. As long as it stay below 66 or 67, this ratio may act in favor of silver. That is, silver may outperform gold.
No, absolutely. And, Mr. Vakil, out of the three, spaces that we've talked about, gold, silver, and Bitcoin, which are the ones that you're going to be picking on for the next 3 months? If somebody was to place a bet between the three, which one would you advise them for?
I would go for gold since my company central banks are much more stubborn. So gold, I always trust gold.
All right, then. So there you go. Gold is the new gold. That seems to be the outlook here as well, at least for the next 3 months. Thank you so much, Mr. Vakil, for taking time out and joining us on the show.